Hi guys, welcome back to the channel. This is Dedan FX, yet again to educate you on something good about Forex. So I'll be coming back after rolling of the disclaimer and the introduction to the video. So yes, welcome back. Today we're going to talk about how to backtest a strategy. For me, you can see I have you can see on my chart there's some vertical lines that are here, green and red. This is a strategy that I was backtesting, and these were the results. Anytime you see a red horizontal line, a red vertical, you see a red vertical line, it means that trade went in losses. And when you see a green vertical line, it means that that trade went in profit. So this was a strategy I was testing for around from January. The results that we could have gotten from this strategy so far. So it was from January to around August. So you can see the results. These were the results. So you would have had 1, 2, 3, 4, 5, 6 trades, 5 wins, 1 loss. So that is the benefits of backtesting. I didn't complete it, but we can complete it together. So I can do it all again to show you how we did it at the end of the day. So my strategy, it is based on trend, and the same way as you have seen in my in the same way as you have seen in my previous videos, I have basic rules for every strategy that I use. So for any strategy that I use, for any strategy that I take, any trade I have, I always have rules. My rules, as from my mentor, are called CEST. So you must have your conditions, you must have your entry reasons, you must have your stop loss, always have a stop loss, and also have your target, your main target that you always have. If you now feel like you want to leave the trade running from there, it will be all up to you according to your own rules and according to how you trade according to your trading plan. So for this strategy, you can start it from January. You can see here, right here, you are in January. So the rules and conditions of this strategy: number one, our price should be moving above the EMA. So once I see price above the EMA, I get to know that I'm in an uptrend. When I see price moving below the EMA, it means I am in a downtrend. So this is how my first rule should be. Price should be moving either up above the EMA or below the EMA. So what I need to see, once price is moving above the EMA, I need to see breaks of structure continuously. If you check my previous video on trend, you'll see how I elaborate on breaks of structure. So I need to see consecutive breaks of structure above the EMA or below the EMA, right? So those are my rules. Those are my first conditions. It is either price is moving below or above the EMA. You can see. So this is what we do, this strategy. So my second condition is I should see price pull back to the zone that it had previously broken. Once I see price pull back to my zone, these are the zones that price has currently broken. Once I see price come back to my zone, I have my entry reasons which we'll be talking about as we continue doing the video. But for my entries, I'll have to use 2 green candles, or I call them 2 trend continuation candles. Those will be my entry reasons. For my stop loss below this low, and my take profit, you can target the high that is there currently for the break of structure, or hold it higher depending on the values of structure that you're seeing, price that might get rejection from. So yeah, those are generally the rules to my strategy. So we can get to backtest the strategy. So you can see here, price came above the EMA, gave a pullback, broke this high that was created above the EMA, and also gave. So my zone should look like this. This should be my zone, right? The zone should look like that. I put this to be a better color. So that should be my zone. Once I've seen price get into my zone, I need to see now my entry reasons, which are two trend continuation candles. That will be either two green candles consecutively or two red candles consecutively. But if you check around here, I did not get any candles in my zone. So what did I do? I left this price to continue running because I did not get my entry reason. Got another break of structure here, get a pullback. So this will be my zone, which I'll be looking for a trade, right? So after getting that zone, we got this pullback, and you can see in the pullback inside my zone, we got to get these two green candles. So for me, this was a valid trade entry. These are two green candles, which are giving me the two trend continuation candles. Alright, so that could have been my entry. My stop loss should have been around around. So I use the ATR for my stops. So my stops should have been my stops should have been my stops should have been there. My target, my main target is always 1.4. 1.4 risk reward ratio. So that could have been my target, and you can see that trade immediately hit my target nicely. So that is how you backtest. Once you have gotten your entry, either a stops or a target or a win. For a win, you use green vertical lines. For a loss, you use red vertical lines. Okay. So you can see what price continued doing. It broke this structure from there, continuing higher. After breaking that structure, my zone should have looked like this. Alright, that could have been my zone. But you can see here, price came back to my zone, yes, but it did not give me two trend continuation candles. So it gave a pullback, yes, but you can see I did not have any entry reason, so I avoided that trade. And after avoiding that trade, you can see what happened. Price broke down below the EMA. Alright, so now we are below the EMA. So what do we look for? Now we are looking for sales below the EMA. Alright, so price made a low, pulled back, uh, made another low, now broke structure. Now my current zone should look like that. That is the zone that I'll be looking for trades. And you can see price came back to my zone. You can see my zone is still valid because all these candles have been touching my zone. So my zone is still valid. No candles went closing way above my zone. So my candles were still closing around my zone. So I got this red candle, this doji candle, and this red engulfing candle. So this should have been my entry. Alright. So this being my entry, my stop should be around here. So I've told you I use the ATR for my stops. So using the ATR for my stops, it means my stop loss should have been around there 117. My target always I've told you is a 1.4. 1 is to 1.4 risk reward ratio. So that could have been a good trade. Also another win. So if you get a win, you use a green vertical line. So after that trade is gone, now we check, do we have another current break of structure around? Yes. So this was your current break of structure. So that could have been a zone. Could have been looking for a trade. All right. So price gave a retracement, came back, gave you two trend candles. So after giving you two trend candles, these are the two trend candles, the two red candles. So this could have been your entry. Your stop loss should have been your stop loss should have been around there. So for this trade, you can see immediately it went into a loss. So how you backtest that? You come at your vertical line, change the color to red. All right. So you continue like that. Price came below the EMA, went back above, came back below, went back above, gave a nice pullback, went back above, gave another nice pullback. So for this pullback, currently my zone should have looked like this, but you can see price did not make it to pull back to my zone. So we did not enter that trade, so we left that trade. Price continued up higher, pull back, we did not get to my zone, which could have been here. Pull back, created another high. So my next zone should have been here. Here where we had the current break of structure. Alright. So that should have been my zone. That being my zone, you can see these candles gave a pullback and they all were inside my zone. No price went against my zone. Alright. So that would have been my zone. So after price gave this pullback, you can see price created, it gave me my entry reasons, which are two trend continuation candles, these two trend candles. Yeah? Because you're on an uptrend, we are above the 50 MA, so we expect our two trend continuation candles to be green candles, right? So my stop loss should be it would have been around there, around 92 pips. So my target, as always, is 1.4. 1 is to 1.4 risk reward ratio. But as I told you, you can target the next high if you want, because price high chances it will create a break of structure. So it depends on what you feel you want to do. But that was another good trade. So that could have been a win. We use a green vertical line. So price continues its movement. So we can watch it. We expect price to break this structure, but it came, pulled back, closed below our EMA, gave another high above the EMA, pulled back below the EMA, came and created another high above the EMA, right? Gave a pullback below the EMA. So you can see, so long as price is not doing according to our rules, we are not taking any trades. Price continues moving just around the EMA, you can see. So we are not having any trades. All this is consolidation if you get to look at it. So all this is what we call consolidation, right? So all that should be consolidation. Price came, created a new low below the EMA now, gave a pullback, continued creating a new low below the EMA. So where my zone should have been, around there. But you can see the pullback did not get to our zone. Alright. So it just came to here, so we did not take that trade. We got this break of structure again. So our current zone should look like this. Now the one that we could be looking for trades should look like something like that. So you can see price just came and tagged in our zone. Alright. So after tagging in our zone, we got two trend continuation candles which are the two red candles that came after touching our zone. So that could have been our entry. Our stop loss should have been around there. Our target, as always, as usual, our main target is a 1 is to 1.4 risk reward ratio. So that could also have been a winning trade, a very good winning trade. All these trades we are taking them on the 4 hour. Alright. So after we got to hit our TP, we get to check which is the current zone that was also broken currently. So it was that one. This is the current zone that was broken currently by price. Alright. So we expect price to come back to that zone, give us two trend continuation candles. That is what price exactly did, price. So after doing that, our stop loss, a 180R stop loss. So that could have been around there. Around there. Our main target we have said is a 1 is to 1.4 risk reward ratio. So that one was also a beautiful trade. We could have been triggered into our profits. Alright. So after getting to see that, now we get to check which is the current zone that was broken by price again. So that could have been our zone. Alright. Around there. So that is the zone we could be looking for some trades. Alright. So we can see what price continued doing. Gave a pullback. Gave us that beautiful trade. Came and broke structure. Gave a pullback again to our zone. But we see we did not get an entry in our zone. Alright. So we just got a green candle and then a red candle one inside after touching our zone. Alright. So after not touching our zone, we also got now these two trend continuation candles here, and we see this week touched these weeks. So it means it was still among the high of the pullback. Alright. So it was still on the high of the pullback. So this could have been the entry. These two trend continuation candles. Alright. So the stop loss should have been around there. So our TP should have been around 1.4. So this could have been a loss for us. Alright. 70, yes. So that could have been a loss if you check well. So use a red vertical line. Alright. So that is how generally you continue backtesting. Price came. Currently you can see what it has done. It has gone above the EMA, gave up a break of structure, pulled back. So this could have been our zone. So after price pulling back, we wait for our zone to get two trend continuation candles with these two green candles. That could have been our entry. Our stop loss could have been around stop loss should have been around there 84. Our take profit, our main take profit is a 1.1 is to 1.4 risk to reward ratio. So yes, that could have been a good also trade. That could have been an amazing win. Immediately it went into our highs. So this was the current now break of structure that price has done. Alright. So now that was the break of structure. This should be our zone. Price did not come back to our zone, gave another break of structure. So the current zone you could have had should have been this one, right? It have looked something like that, but you can see price did not give us an entry. It went flew by our zone, going below the EMA, getting back above, going below, getting back above, going below. Okay, so price continued higher, gave another break of structure above the EMA, gave a pullback again, another break. So your zone could have looked like something like that. All right, you can see price just came and touched your zone. So your zone should have looked something like that. All right, I love including more zones in my zone to give it more confluence. So price came, just touched your zone, gave a nice beautiful entry. So that could have been your entry because of these two trend continuation candles. Stop loss being around 57, 58. Our target being, our main target being a 1 is to 1.4 risk reward ratio. Right, so that should have been our good trade. So yes, that is how generally you backtest a strategy. Nothing hard, just that. And now because you are backtesting on the 4-hour time frame, if you go now to the weekly, you'll be able now to see all your vertical lines better. You get to see them extremely well. You get to see your results. So you can see how my results were. All these are my results. All these are the results that you have just done right now. So that is how you get to backtest. You can see, and from January to around July, you could have had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades from January to around Monday, July. So those are 6, 9 trades, 2 losses. All right. So it means if you are risking around 2%, you could have been up in profit. So this is a very profitable strategy, and I teach it in full in my course. All right. So if you need any mentorship, you can get into our course. I call it the Dead and Effects mentorship program. You get to learn with the rest of the team. It is a good team I have. We enjoy, we have fun. So yes, this is a good strategy and a very profitable strategy. So generally, that is how you should backtest. So if it is any strategy you have and you want to go and backtest it, go to previous data. Maybe you want to backtest it for a whole year, how it has been doing for a whole year, how it has been doing for around 2 years. That is the way to go for it, in case you have not paid for the trading view replay bar. All right, so it is a much more easier way to know the importance of your strategy. So the main aim of backtesting is giving you confidence with your strategy. Backtesting gives you a lot of confidence to the point that you get to understand your strategy even more better, and also to optimize it on taking much more better entries on your strategy. So for me, it's a very profitable strategy, as you can see. 9 wins, no, having 7 wins, 2 losses. That's a good strategy. It means you're a profitable trader. So thank you for watching the video. Hit the like button, subscribe. If you want to join us, join the Dead FX community. The links are on the bio. You'll go and check the links on the description below. The like button, also subscribe and hit the bell button. So watch out for the next video.